Okay, so jumping into things, it's a little bit later for these Mondays that are recap or daily take videos and that. So it's 11:44 p.m. Local time. So really just sort of want to have a quick sort of squiz around the charts, just sort of see what's happened, mainly the price action through Asia, and obviously a little bit of the Euro session, and we've got US sort of volume and that coming in soon. But certainly the main play for me, obviously, has been this Aussie trade that I've been sort of going on about the last couple of weeks and that. And certainly, if you watch the sort of weekend review, I was saying that look, we are here, we're ready, we're right up above it, and we had a little bit of a stuff around, a little liquidity grab early open this morning, but really once it sort of got past this sort of breakout zone, it just took off. So it's been a nice little break, but can see that it's been sort of building for quite some time. I mean, we can see how important this area has been. It's been crucial. I mean, we'd have to sort of go back to sort of early August before we're sort of seeing Aussie at these levels previously. So it's been a nice little sort of breakout run. We've had a bit of a pop here. This breakout I just noticed as well gave us this sort of little flag area here. If we sort of drag this off for a bit of a measured move, you can see this is pretty much sort of worked out in line with where prices sort of come to a halt. Sort of up around the 60 zone, and it hasn't given back a lot of it since. So it's really just sort of been really just sort of consolidating. What's this for about the last most of Euro end of Asia session and most of Euro session. I mean, this is between 60 and 45, so it's a pretty tight sort of little range. But to me, that's just, and you can see even now as it's been tried to be pushed down, people are buying it up. So it's formed itself a nice little range up here, which we can use for a breakout for the next leg. If we are going to see some more upside in the immediate. I do think that US dollar is probably due for a little bit of a rally though. So I did take a little bit of profit off the table through this move, which has been a great start to the week. But yeah, I do think that we may be sort of due for a little bit of a pullback down here. So I've got a couple of orders sitting a little bit lower, looking to sort of catch a bit of this swing action, sort of coming back down to retest these zones. Because, if you look at the sort of the stats, there's still a lot of people sort of piling into Aussie shorts, quite a large lot, which, what I mean, if it does keep moving up, they're just going to I mean, they're ripe to be squeezed. So that's just going to add to this buying pressure. But people are still adding on shorts at these well-known areas because if you look at these last time, if we get jump onto a bit of a higher time frame, I mean, if you had sort of shorted from this area, most of the time, or every single time for the last 3 months, you're doing very well. I mean, these are moves, from this area. There's a 2% move. That was 1% or just under 1%. This one, 2.5. So I didn't get quite up there. But this is why people are still shorting it so heavily. Because look at the size of these moves that they're hoping they're just going to get a repeat and a capture of. That's a 3% move from the last time we were up around this sort of 65 zone. Well, sorry, not last time we were up there, but previously. So these are the reasons that people are still trying to pile into these shorts. But it's also the reason why sort of it adds to the liquidity and the fuel for these moves once they do break to push out to the top side. I do think we're going to get a little bit of a pullback. Just structurally, I'd like to see a sort of bit of a pullback and a retest of this, of being such a sort of strong sort of short position. But if people have added on their shorts here and they sort of have gone and they haven't been stopped out, they're just like, okay, look, comes back down here. Here's my chance. Get out for even, whatever. I'll reset, move on to another pair. Maybe they'll look for longs, whatever. But if they're short and they get the option to come back here, and because every other time it's come down and they've done very well. Well, this time they're in drawdown, and they're in drawdown, not too bad, but 0.5% or so. So as it comes back down, if it starts to sort of base around here, you're going to see a lot of those sort of short positions start to cover. And when shorts cover, that's buying. And that's going to give us another push back up to the top side. So I think if this does turn out to be the high of this breakout move, then this is going to be very crucial. This is going to be the sort of like the confirmation of the breakout move. We got the breakout, we got the back test, and then sort of push past the high of that first breakout move confirms the next leg and the sort of pretty much the whole sort of the continuation of the trend of this breakout. Just above us, we do have 66, which is going to be a pretty tough area, I think, regardless of what happens. So the risk reward's getting a little bit tougher if you are just sort of jumping on around these areas. So that's why, again, I think sort of we can sort of get a little bit of a pullback, get a little bit of a better price back down around these sort of, 65.20s to 65.10. I think we could see a nice little base come up around this area, which could sort of give us a chance to sort of build the position back up a bit, and then look for a next push up to towards 66. But of course, a lot of this is also predicated on what they're doing with the US dollar. So, I mean, obviously, I'll flip over to DXY in a second, and they've been selling that off relentlessly, which has been a great trade. But there's going to be points where these people sort of think, oh, you know what, this is worth a shot to see if we can really sort of get it pushing back up. I mean, US is still coming out with very good data. Like, despite everybody else reporting quite poor figures, they still seem to be doing better and better. But the thing is, it's sort of like, as a safe haven status, the Middle East thing sort of has gone away. The equity markets and everybody's sort of like happy to sort of take on a bit of risk and push more. So, you know what I mean? That's why people have sort of got 3 months pent up profit through that US dollar trade. Well, they don't want to be left sort of like holding the bag as it sort of and ride it all the way back down. So, they'll continue to sort of sell it off a little bit. And these kind of things are, again, it's going to bleed across to all the crosses, which is going to give us a bit of a push, obviously, with the Aussie dollar. But for the time being in that, it was a great start to the week. Nice little sort of push here. If I have a look on this other chart, this is pretty much, it straight explains what we were doing. If you look through sort of Friday's video, I think it was Friday's video, and then obviously sort of the recap over the weekend, this is exactly what we saw, what we said, that we saw these candles are really tightening up around this zone here. We knew that the buyers are here, buyers are here, buyers here, buyers here, go, 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 go. And then all of a sudden there's nobody else trying to sell them. And so what happens? They overcome it and they go looking for the next level where people are going to try and sell it down to them. We can see this previous area where we had these sellers this was just after the RBA. Is it after the RBA? Sorry, bear with us 1 second. No, it was, what was this? It was, that's right, it was the retail sales. Yeah, RBA was yonks back, all the way back over this here, where they sort of sold up and then smashed back down into it. No, this was the retail sales. But the point being is that sort of even though we had that strong data, it got sold into. And that was mainly just because US dollar was running up at the time. And this is what I've said a couple of times with the Aussie, you can have good data for the Aussie, but it just does not matter. We're too small of a currency. Like, it can sort of help boost if US dollars being sold off and we have good data. Well, okay, yeah, we got double-pronged approach for it all, but unfortunately, we just take a back seat. Even if we have good data and the US dollar or has something sort of driving it or pushing it as well, at best, we can just not get hit or not be damaged as hard as we would otherwise. But of course, the ultimate downside of that is if we have poor data and people are already buying the US dollar, well, this is the result. This is what happens through these areas. So anyway, back to sort of the here and now. So we've got the breakout. It's sort of thinking about it. I reckon that we may have a little bit of a pullback down here. This is where I'm going to be looking to sort of stalk it, to sort of pull in some more entries, and then sort of like see if we can really push up towards that 66 target. I think 66 is going to be, as I said, pretty tough to crack. But certainly, again, if they keep selling off the US dollar, this is what's going to fuel us, because everybody's just going to get a little bit of a push as they sort of basically bleed out the US dollar. So yeah, it's a nice little start to the week, and we'll have to sort of see what they want to do through US session. So if we flip across, talking of US dollar and DXY, definitely, I mean, we got the textbook continuation basically from Friday's price action. So as I saw over the weekend and obviously end of Friday session, we had this range that we were through all week. And where it actually sort of finished and came down here, if you missed the weekend video, was basically this completion of this bear flag that sort of came here. And it pretty much closed right on it to the cent. So we had a little bit of a push up, a little bit of a liquidity grab early morning. But as you can see, it didn't last very long. And as soon as it got sort of sold into, it just absolutely melted down. Bang, 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 bang. But this is what I'm sort of saying with these sort of flat bottoms without wicks. You can sometimes be a little bit of an early indicator that you're going to at least get a rally up and a push up on the next candle. So we're seeing them try to sort of take it up a little bit here. If you get down, I've noticed this before. I mean, it is going to have a little rally at some point. And I'm not a big fan of this little channel that's going on here, but we can see a couple of areas where this is sort of saying, okay, they are trying to respect this channel. You've got the buying coming down the bottom side here. The fact that it's sort of pulled away before the completion of this, and we've got a little bit of this sort of negative divergence happening. This is only on a 1 hour, so a negative divergence on a 1 hour is not going to give a full trend turnaround, but it is going to give a rally attempt at the very least, and those rally attempts then can turn into negative divergences on larger time frames or so on and so on. But yeah, it's obviously trying to sort of push up along here, not really making it too far at the moment. I do think we've probably got, I do think we have more downside. I do think we, as I said, these lines are probably a little bit over dramatic, but a bit of a rally off this zone down here that we sort of marked out sort of over the weekend to come up. I think this move as it comes up through here, whenever this happens, and this could happen to here, to here, to here, to here, but this is the general idea that we'll get a bit of a sort of a rally attempt. This will just be a liquidity grab to then attack the lows, which if this is the low here, or if the low comes in down here, attack the lows, break that through that, and then sort of come down. And as you can see, the next price target is the completion of the bear flag that we saw, that basically sort of the flag part was sort of formed through last week using the CPI as a measured move for the poll, whatever, and then sort of coming smack down here. So that gives us that sort of sub 103. But I think at this stage, we could see a little bit of this sort of channel sort of forming, but it started to really, I mean, it's not really getting up over here. So I was thinking if we could push up and rally over here, well, here were some nice sort of areas that you could expect it to be sold in from. It couldn't even get up there. So obviously that sort of just says, look, for whatever cost, they're trying to sort of get out of this. So I think it's going to be a little bit of work for them sort of to turn it around. We've got a bit of news coming out this week. I think it's, just bear with us again 1 second. Yeah, so we've got a little bit of news coming out, not great. I think Wednesday morning, 6 a.m. local time, we got the FOMC minutes. So depending on sort of how hawkish they sort of can put the comments together and sort of come across in that may sort of give the market a little bit of a spur up. But again, I think these are really just areas to sort of grab liquidity just to be sold into. I think that you've got to respect the fact of how hard they are selling this down, and they're not just selling it down. Obviously, DXY is the basket, but even things that aren't related. And this is why you're seeing Aussie move, and this is why we're seeing the breakdown in the Yuan, or USD Yuan as well. It's a broad across the market move. With US dollar being sold off, it hasn't got, the market's not in that risk off sort of mode. The Middle East situation hasn't really sort of done anything for it to sort of kick on. And we're seeing equity markets absolutely rip to the top side. So I think there's definitely, you've got all these things that have been beaten down for so long that offer a great upside move, or you've got US dollar, which has run relentlessly for 3 months, which a lot of people would be holding profit. The risk to reward to be buying US dollar at the moment just isn't the same, obviously, as it has been recently. Despite how good their news are, they do seem to be sort of coming out with some constantly good data. But yeah, if that starts to fail, then certainly we're going to see a bit more of a move and accelerate to the downside with US dollars that are moving forward. I'll flip across to gold. Gold, you can see here, it started to form up a little bit of a channel. Caught a couple of, just a quick intraday trade just through this area here, bought the sort of channel support. So if we sort of drag it through this area here, so that was a nice little trade, but it's really sort of just, even though US dollar has been selling off, gold is also sort of selling off. So, gold is one of these things, I say it's kind of like a risk fluid sort of thing. It's, it can be risk on, it can be risk off. And the key to sort of trading gold is to sort of really sort of recognize what side of the boat is it sort of flying, hanging on, sailing on. So it's a bit late at night. Anyway, what side of the boat it's on at the time with risk. And at the moment, obviously, seems, the market's very risk on and it's moving down. Well, it's associating as a risk off kind of asset. I mean, look, once upon a time, it was always considered risk off, but you've got so many other areas where people can put their money nowadays. It's more than often a good sort of just indicator running inverse to the US dollar. And if we see US dollar selling off and gold selling off, well, that's very much the market's in a risk on mood. So we're going to have to sort of see sort of how deep this sort of pullback comes here. I still think it does have some more sort of upside potential. The fact that it is just doing this little dribble to the downside here, I'm not really sure 100% sort of what to sort of make of it at the moment. But certainly we've had a nice little bounce from where we got down 1932 up to 1990. So a $60 move from the lows. It's not too bad, little sort of reprieve here. So we'll have to sort of see where it comes down. I think sort of 1970. I was saying if I got on the other chart, it might be a little bit better. Yeah, I mean, look at this. It's pretty much come smack bang on this area that we sort of had drawn up. So it's given up this little channel, which is fine because, I mean, if we put this, I think it was a 4 hour, we said, yeah, this sort of shows it quite well. And this is the negative divergence that we were sort of seeing start to form just up the top here. And we were saying, look, if we can sort of break through this rising sort of, it was almost like a bit of a wedge with the stotch here. And if it broke through those previous and we saw the selling come in harder than it had previously, well, that was pretty much an indicator that we were going to start to sort of see a little bit more downside move. But, it's certainly, it's still up the top end here. I mean, realistically, this is a back test. We can see that 1970 area was quite a sort of resistance a few times sort of in the last sort of couple of weeks. It's broken out, and this is another thing, is it breaks out, keeps goes. Well, this is just a back test. So particularly if this can hold around this zone here, it's only at the 38 of this move. I'd like to see it back up into the 1980s, as per this sort of little line that I've sort of going along here, sort of thinking that we might be able to get some sort of little range play up the top up here. But for now, it's at the 38%. It has broken this little channel. So, again, you got to respect that. But certainly if it can consolidate around this zone without sort of dropping too far down, then I think this could just be a little bit of a shakeout move early and then sort of move back up. So, again, I think the FOMC minutes will be the next sort of driver for gold. I can't really sort of see too many other things on the horizon, which are going to be sort of like the major sort of catalyst events for it. But certainly, I think it's still up there where we're at now. It's the 21st. So the big thing is to sort of see how it can close the month. And it's right in the kill zone. I think it was 90.91 was about the highest it's ever closed on a monthly. So anything above that, which is only $20 off from here, which is, next to nothing. So it's certainly it's got some more sort of upside potential, I feel, in the short term. And just going to have to wait for it to sort itself out, chill, just do a little bit of sideways action. And then sort of have another attempt to sort of see how committed the buyers are. And again, you just want to be taking out these previous highs, and then we can sort of go, okay, yep, it's back in the game. But for now, there's no rush to sort of jump on and add too much to it. China's been a great trade, great breakdown. We've just seen it go and go and go. So, this is, if you've been following anything I've been saying, this is the great China grind. 3 months in 1%. And it was just back and forth and back and forth. It was the most arduous grinding trade. Jeez, but we're seeing this sort of definitely sort of come through, smash through price target here. As I said, sort of, this is a fairly rough one. I mean, it depends where you really want to call these sort of little zones here. But basically, the idea being that it's a 1% move inside this range for 3 months. A measured move of range plays is just the same size of the range to the break side. As you see, this would have been the top side target. And obviously, we've been trying to trade this. Well, we have been playing this trade to the downside for a long time, just to sort of get back through this sort of rising support. And even here, we can sort of, if we drag, start to clean a few of these up a little bit, I'll be able to see it better on the daily. Excuse me. Yeah, you can see it's absolutely just sort of melting down from here. This was a beautiful little sort of negative divergence up the top up here, and it just hasn't looked back since. So if we sort of drag something down here now, okay, it's got a lot of work to do to sort of recover on this. But as I sort of said, I mean, this was a nice sort of smooth move up here. Maybe we're going to see something come right back down the bottom here. This is my sort of next price target, obviously sort of set up of these sort of big zone here, this sort of, 712, 713, 14 kind of area. I'm expecting quite a reaction from this zone here. This is the 38%, so it doesn't mean the whole move is intact, but it certainly means it's in trouble. This is the sort of head and shoulder that I've been sort of looking for to play out. And certainly at the moment, we're looking like the head's almost sort of confirming, coming down if we can sort of get a reaction through here. And again, the sort of test, and then the sort of subsequent sort of liquidity grab, and then run down. If we can break that level, that's confirmation, and that's good night. And obviously I've got my little, this is where I reckon DXY will be sub 100 if we can get to this zone. And, it's very plausible the more it plays out, because realistically, I mean, it's only 3% off. DXY is only 3% off 100 at the moment, and I think there's going to be a little bit of backforward grind in that before this can actually get down to this zone. So plenty of time for all those other actual DXY crosses to sort of sell off a little bit more of their US dollar and sort of drive up their crosses and their pairs. And finally, just sort of finish off with copper. Copper is just doing its thing. It's just grinding on. It's really coming up to the zone. As I said, this is the weekly zone, the 380, which I've been sort of thinking is really going to sort of be a nice indicator, a nice sort of confirmation to get a close up in this area. This is on a daily, and obviously you can see it's sort of really had a bit of trouble around this area. And these are quite high. These are just wicks through the weeklies. I think it must have been sort of, that's a Thursday, Friday. So there's a wick and another wick. So 2 weekly wicks up the top like this before coming down. So it means that if we can get a weekly close above 380, that's doing what we haven't been able to do for quite some time. And obviously we were moving in a completely different direction when we sort of were last up those to where we are sort of coming up here now. So I think it's been a great trade, this one, the copper. And these are the kind of things, there's little indicators that are obviously sort of pointing towards sort of continued Aussie strength. So if we can sort of continue to keep pushing forward on this one, I think, we could be starting to sort of see, it's not going to be easy, because certainly this area here is going to be creating quite some sort of tussle. But certainly I think sort of at the moment it would be coming on a lot of people's radars, the fact that it has sort of broken, back tested, and broken its breakout candle. So that's sort of pretty much, as far as I'm concerned, a committed break to the top side, and that's through that sort of yearly falling resistance. All right, cool. That's about it from me.